Bandhan Mutual Fund presents MF Corner.
Hey guys, good afternoon and welcome to this MF Corner YouTube special. I'm Pavita and today I want to talk to you about this big NFO rush that we've all seen. You know, just this month we got the data and it's been over 6,000 crores which has been mobilized through NFOs. But when does an NFO really make sense over an existing fund, and what should your approach be when you look at any kind of new fund? We have Kaustubh Belapurkar, who's Director of Fund Research at Morningstar India, to really take us through all of these questions. Kaustubh, as always, thanks a lot for making the time for this show. And this is a question that we get, a lot from investors, that how should they assess an NFO? So first off, just tell me, what are the key points that you should check when any AMC launches a new fund?
Yes, you're right, Pavitra. I think it's been a gold rush, so to speak, I think over the last couple of years in terms of new fund offerings. I mean, obviously, the market's been buoyant. There've been a lot of, and if you just look at the data, right? So I think the trend last year was, or in 22 actually was slightly different because you have a lot of these fixed income, passive NFOs, given where the interest rates were at, locking in those yields, what we call the target maturity funds. Now, they've obviously come off given the new taxation norms. So, after April, clearly we haven't seen too many of those. But I think the underpinning other theme that is really played on, when I say theme, is thematic and sectoral funds, especially thematic funds. I think they've been kind of really popular in terms of new fund launches. I think that's been the broader trend, right? So I think from an investor, when you think about it, obviously it becomes exciting to think, new fund offering, but I think what's most important, and honestly, we have not been big fans of looking at NFOs, very, very aggressively, and for two simple reasons, right? One is, if it's an NFO which is in a space that already has well-established funds with long track records running, then, what is really the merit of looking at someone who, it could be from a new asset manager or probably from a existing asset manager, but, here you already have funds that have been run with, certain process, certain style, and they've been doing that consistently for a long period of time, right? So why not look at those? While it might be exciting to think about a new fund, but, why not just go for the tried and tested, right? So that's the first thing. The second thing is, and more importantly, from an investor's perspective, just because it's a new fund offering, it may not necessarily be the right fit for your portfolio, right? I think that's the basic homework that every investor needs to do, either do it themselves or consult your advisor. Because, for instance, I spoke about thematic funds or, say small cap funds. Now, these may not be suitable for all investors, right? I mean, obviously, we've seen this great rally in mid and small caps, and there has been a lot of money that's been, being invested in small caps by investors looking at the past performance. Now, why that worries me a little bit is because new investors coming in with that mismatched expectation that, hey, let me just, buy this fund because this category has been doing well. That's wrong, right? So I think the homework that every investor needs to do is, firstly, what is the merit of that fund standalone that, does it make sense to buy a new fund or look at an existing fund? But more importantly, before that, think about, do I even need this kind of a fund in my portfolio, right? Does my risk return objectives, do my time horizon, does it really support this kind of, a fund? Small caps need 7-10 years investing horizon. If I'm a 3-year investor, clearly that's not going to meet the grade, right? So I think that's the thing that firstly investors need to do. And then obviously all of that in terms of just looking at alternatives within that space rather than just going with a new fund.
All right, so those are some points that you should take into consideration and really look at when you're looking at a new fund. But the main disadvantage with an NFO is that you have no track record. You don't know how this fund has performed. You don't know how the fund manager has performed. So when do you think it is okay to invest in spite of there being no track record?
Sure. So I think, I would think of a couple of circumstances where you can make a pretty strong case for an NFO. One is that, you very correctly alluded to, is that, if the NFO brings in something unique and you think, it merits a place in your portfolio, right? So, like I said, there have been a lot of thematic funds. If you think you have done some research, you understand the underpinnings of that particular theme, be it the defense sector, manufacturing or something like that, and you really want to take exposure to that, theme, albeit obviously you want to take a graded exposure in your portfolio. So it brings something unique to the table. Sure, then then an NFO is probably a good thing to look at. Like in the past, we've had, say, NFOs of international funds, right? For the longest time, we didn't have too many in national funds available. And over the past many years now, you've had these, those would be a prime example of when you would think about, say getting into a new fund offering. The other one, which you can potentially think about is, say, for instance, and again, this is not necessarily always a strong case, but, a potential way of looking at it, right? It is being managed by an asset manager that you know well. Maybe they're running a mutual fund, or they've probably been running a PMS or some other, they have a proven track record, their style of investing. And you think that, hey, they're coming into a space where, while there are already players or, funds with long track records, but I think this manager I know well, and they probably bring something unique to the table through the investing process. And maybe I want to kind of, invest in their new fund offering, even though it doesn't have a track record, because, either through the conversations or the understanding in the documents and their presentations, I make sense that, it's going to be following a very similar theme, albeit maybe see in a, flexi cap space versus, previously being run in a large cap mandate. So I think those are two typical examples that I can think of where perhaps you can think of an NFO being, evaluated and probably a way of, taking exposure.
Okay, that is understood, and I think it's important to place that caution on the table as well. But just one final question. Say you decide to invest in an NFO, you've sort of narrowed it down to one. Do you think an SIP is a better approach versus lump sum? Because you're at least, staggering your investments, you're not putting it all in together. Do you think you should look at that kind of cautious approach, or it doesn't matter too much once you've made the decision?
Or you think there's nothing of that sort?
So I think, one is that, I think we're very firm believers that, look, SIPs are a great tool, right, for any investor. Obviously, if you have, it depends on the financial circumstances. And this is true not just for NFOs, for any fund, right? Is that if you have the money today, like, you got a big bonus or whatever, and you want to invest the money today, obviously, it will not make sense to do an SIP, say, over 3 years. We want to still avoid the timing of the market. So I'll probably stagger it out over the next maybe 6 to 12 months. But yeah, I think, just systematic investing brings in that discipline. So, because an NFOs, unless it's such a unique offering, and, you had some of these strategies which would only open, like I used the example of the target maturity funds at that point, so I think the point is that typically you want to do it systematic investing, unless, it becomes a way, you have the money today and you want to do it over a short time frame. For instance, it's a fixed income NF, right? Where really timing doesn't matter, right? You can put all your money today and put it to use right away. So I think those are some of the nuances you would think about, but otherwise SIPs are probably the best way to go about equity market investing at least.
All right, Kaustubh, it's been a very helpful episode on, a quick but very useful guide on how you can look at NFOs and everything that you should consider when you look at a new fund, considering that you don't have too much data to really rely on. Thanks for making the time for this MF special today.
Bandhan Mutual Fund presents MF Corner.